today we're going to compare and contrast the recent rally, today's rally in fact, to October's bearish volatilities and perhaps ways to trade what may be ahead. As for what we do have happening today, clearly a post-election risk rally. Take a look at the Dow Jones futures up 1.6%, the S&P 500 and the Nasdaq 100 futures also sharply higher. In fact, both the Dow and the S&P 500 futures on the week on pace for their best weekly performance since March 9th, so outpacing last week's big week. So the buyers really trying to take control after October's volatility, helping out the dollar index down 0.3% at the lows, on pace for the worst week since August. Now, as for that volatility back in October, let's take a look at a one-year chart of the E-mini Dow futures. And what we are seeing here overall is an ascending range, tons of volatility, really a battle between the bulls and the bears. Earlier this year, lots of volatility around that 50-day moving average. Ultimately, the buyers prevailing. And then in October, of course, rising rates, the midterm elections, trade tensions, all sorts of different factors causing the bears to take control. But today we have the Dow futures back above that 50-day moving average, hitting up on resistance. It appears that this could be a head fake rally, that we may actually just see this contract go right back down into the range, perhaps make a swipe toward the top. But ultimately, there's something about this that still stands as bearish, especially this whipsawing between the bulls and the bears. So to talk more about it, Joe Perry of Forex Analytix. And what do you think? Is this a head fake rally?
Yeah, hi. Yeah, you could see resistance right there where you were showing on that last chart. But the elections are over now, so the uncertainty is out of the way. So stocks are going to continue doing what they were doing for the last week or so. However, we still have the same issues that we've had going on since before the election. We still have worries about rates. We still have the tariffs. We still have underperformance in some of the smaller sectors and some smaller stocks. So we still have those things to worry about.
So you think that we could continue to see a bit of a pop, but then probably back down. Let's take a look at it through your trade. And this is actually another way to take a look at the trade. This is the dollar, the euro dollar. Mm-hmm.
Right, so if we look at the euro here, you could see that we have broken out of a short-term trend line across the top there, and we could go up to around 117. That's kind of the high of this channel, and that should cap it right there. You may want to be selling on the way up, or if you buy, 117 would want to be your target level, and from there you would probably want to sell.
Okay. So you would look for basically a continued rebound rally here in the euro against the dollar. Dollar would decline, and then kind of the opposite direction.
Yes. Euros and stocks generally move in the same direction. So you would expect that if we do get a bounce here, that up towards 117, that we reverse and go lower.
So, you know, Joe, you traded futures, currency traders for 17 years. What do you like about futures?
Yeah, well,
why do you trade?
Well, futures especially, you get really good leverage in there, and liquidity is really good. There's always a lot of volume there, so you're able to trade it and not have to worry about slippage cost in there. So futures make a really good vehicle to trade with instead of individual stocks sometimes.
Great stuff. Joe Perry of Forex Analytix, thank you so much for joining us for Charting Futures.